good morning, good afternoon, good evening, wherever you're located at in the world today. The top 10 trading tips for no matter what market you're trading in, as all traders, right? Stocks, Forex, crypto, futures, binary options, it doesn't matter what market it is when it comes to technical and fundamental analysis, when it comes to the psychology of trading. These right here are my top 10 trading tips. Number one, you have really knowing when exactly you need to be trading, right? So first 30 minutes of sessions you must stay away from. The first 30 minutes of sessions you must stay away from. When the market opens on Sundays for foreign exchange market, right? You must be aware to stay away from the first 30 minutes of the session and the last. Okay, and the last. And one other thing when it comes to tip number one is knowing when exactly to trade, right? As far as even the days, right? So Sundays and Fridays, you stay away from. Until you become more advanced on Sundays and Fridays, you stay away from the markets, okay? The market structure is not followed the same on the first 30 minutes or last 30 minutes of a session, but when it comes to, Tuesday, Wednesday, Thursday, the market structure is following fundamentals a lot better than it is the first 30 minutes, Sundays or Fridays. So first things first is knowing when not to trade, right? Knowing when to trade, knowing when not to trade. Okay, number two, you have Forex Factory. This is so important for all new traders, right? For all new traders, Forex Factory, knowing the two types of trading, right? You have fundamental and you have technical. Knowing the two types of trading, being aware when news is going to come out in a certain currency pair, right? Is the US dollar, is Donald Trump speaking, is earnings, earnings reports. It doesn't matter what market. Look at Forex Factory for the foreign exchange market, all these other markets, stocks and crypto. Do your research. That's where the fundamental analysis comes in, is the research done behind trading, right? The psychology aspect of trading. Number three, you have greed. This is where the emotional intelligence comes in. Knowing the greed factor comes into play as you are trading, the psychological aspect, right? And here's one thing with greed, right? Understand that you can't go broke taking profits. So no matter what it is, if you're up $100, $20, most of the time, some of the times, you want to just close that trade out. Be done with that trade, take your profits. You can't go broke taking profits. There's been times where I've been up $100, I've wanted to make two, I was so greedy that an hour later, 2 hours later, I was down $100. Just like that, and these markets are so volatile, be aware that the greed factor is gonna come into play. All right, number four is patience. So patience is huge because you have to let the markets come to you. A lot of people do two things, right? They do this. They overtrade. When you realize, especially in Forex, that there's so much opportunity. There's so many currencies, right? There's so many cryptocurrencies now. There's so many stocks. There's so many things that you can trade. Being patient and taking the right ones, and we're going to get into that more down the line here, but patience over trading versus revenge trading. So this is huge, right? If you lose $100 in the market and you say, okay, well, wait, I'm going to make that back right here, right now. You're revenge trading. You're greedy. You're not being patient. You're revenge trading, right? Revenge trading and over trading. That is tip number four. Number five, we have risk management, and we have risk reward. Risk management. And risk reward. So risk management, you have to be aware of in Forex, your lot size. In crypto, the amount of money you want to be able to risk, right? Don't invest money you're not willing to lose, number one, and understand your risk management as you want to be able to fund. That's right here, understanding how much you're willing to lose, understanding where the best setups, and that's where being patient and not greedy and using Forex Factory and not trading the first 30 minutes of a session is all going to come into play when it comes to risk management, right? So proper lot size for the Forex traders, right? Proper lot size. Now risk reward is simple. Risk reward, we want to only take 2-to-1 ratio trades or even 3-to-1 ratio trades. We want to be able to risk $100 to at least make $200. We want to risk $200 to at least make $600. This right here is how there's professional traders that don't even have to win more than they lose. But when they lose small. And when they win big. It's because they're patient and they're doing all these things that enables them to take the best of the best setup. So that's number 6. Number 7 is the stop. The stop loss. Always know when to cut your losses. Do not ever marry trades, right? Always use the stop loss. When I was first showing somebody Forex for the first time, I didn't check Forex Factory. I wasn't being patient. I was pretty greedy, and I wasn't using any of this, and I didn't have a stop loss. And what happened was, as soon as I entered the trade, there was news that came out on Forex Factory. There was news that came out, and when the news came out, my trade went completely the opposite direction, right? I was just showing somebody, hey, this is how you enter a trade, completely opposite direction, and I just started losing money right away, right? Because I didn't do any of these things. I just hopped in a trade to show somebody, but I had no idea why I was getting in the trade. So that's all this kind of together. You need to know exactly why you are entering in every single trade. Number 8 is scalping versus swinging. Scalping versus swinging, okay? So this is to understand your game plan, your trading plan, your goals, right? Trading plan. You need to have a trading plan. 100%. So scalping is simple. Scalping is more short-term trading. Now you're looking at the 15-minute chart. You're looking to get in and out of trades extremely fast, right? Within, 10, 20, 30 minutes, you're in and out. Swing trading, this is longer term. This is maybe staying in a trade overnight, right? This is maybe staying in a trade throughout the week, and at the end of the week, maybe you catch the whole move instead of just a little move inside of the swing. So being able to know what type of trader you are, what type of time frames that you look at when you're doing your technical analysis, right? Number 9 is pips versus profit. And number 10 is consistency versus compounding, okay? Compounding. Consistency versus compounding. So pips versus profit. This is very simple. Count your trading journey in percentages even. Pips, right? How many pips did you catch that day? Not how much money did you make, because it takes the same amount of process in the markets to make $1 as it does to make $1 million trading in the market. So if you can understand pips, and if you can catch 50 pips a day, you may only be making $50 a day now, but 50 pips a day can also make you $5,000 a day if you get your account bigger and you start using bigger lot sizes based off of your risk management. So understanding all these things, okay, go back, watch this again, really take notes, figure out what type of trader you are, and use the system, use the trading tips to help you on that journey. Now, number 10 is consistency versus compounding, right? You must be consistent in the markets, taking those trades, being patient, not being greedy, because at the end of the day, it's about compounding, right? If I gave you the choice between $1 million cash right now or a penny doubled a day for 1 month, most people would choose the million cash. But the penny compounded over 1 month, doubling every single day, is gonna give you over $5 million if you stayed patient for the 30 days and didn't have greed to take the million. Consistency and compounding, use these trading tips, go back, take advantage of all these. If you do all these correctly, you will profit in any market there is out there.